Global markets are carrying a more constructive tone into the North American session, with easing geopolitical tensions between the US and Iran continuing to drive the broader macro narrative. Weekend reports suggesting Tehran may be prepared to compromise on enriched uranium initially triggered a strong relief move across global markets, though subsequent comments from Washington and Tehran have tempered expectations towards what now appears to be a broader framework agreement focused primarily on de-escalation and reopening the Strait of Hormuz rather than a comprehensive nuclear accord. Still, the absence of any escalation through the weekend has been enough to trigger a meaningful unwind in the geopolitical risk premium across asset classes. Oil remains at the center of today's adjustment in global markets. WTI has fallen sharply, dropping back toward the low $90 range as traders price improving shipping conditions and reduce disruption risk through Hormuz. The decline in energy prices has fed directly into global fixed income markets, with European bond yields retracing aggressively from last week's highs as inflation concerns ease and safe haven positioning unwinds. The move lower in yields has in turn weighed on the US dollar broadly, reinforcing the more positive tone across risk assets despite extremely thin liquidity conditions owing to holidays in the US, UK, and much of continental Europe. In FX, the softer dollar remains a dominant theme, though price action is being amplified by reduced participation. Euro dollar is holding firmer around the mid 116, but continues to lack strong directional conviction after its opening gap higher, while dollar yen remains anchored just below the 159 level despite the decline in global yields. Yen upside continues to be constrained by Japan's worsening fiscal outlook following confirmation of additional debt issuance tied to fresh budget spending measures. Sterling has been among the stronger performers after cable reclaimed its 100-day moving average, while Aussie dollar is benefiting from the broader improvement in global risk sentiment and the sharp drop in oil prices. Equity markets are also reflecting the improved macro backdrop, with U.S. equity futures trading higher into the North American handover despite cash markets remaining closed for Memorial Days. NASDAQ futures continue to outperform as lower yields and falling energy prices support the broader growth and technology complex, while Japan's Nikkei extended to fresh record highs during the Asian session amid persistent foreign inflows and ongoing enthusiasm around AI-linked themes. On the geopolitical front, markets are also digesting reports that Iran's parliament speaker and foreign minister are now in Doha for talks with Qatari officials centered around Hormuz, highly enriched uranium, and the possible release of frozen Iranian funds as part of a broader diplomatic framework. President Trump, meanwhile, reiterated that negotiations are proceeding nicely, but stressed that any agreement must be all or nothing and tied to the broader process to a possible expansion of the Abraham Accord frameworks across the Middle East. For now, markets appear willing to reward incremental diplomatic progress, though the broader macro outlook remains highly sensitive to any indication talks begin to stall or geopolitical tensions re-escalate. That's all for now.